Well, just give me your take on the quarter, the $800 million. They were told us last quarter they were going to spend more. It didn't show up in these numbers, but it is going to show up.
It's going to show up, and it's not only going to be on the free shipping. They're going to spend money on content. They'll spend more money in India. They're going to spend money in a lot of different places. But from a credit perspective, this is a great quarter. You've got lots of profit. You've got margin expansion. Sales are getting a little soft, but that's okay. They're making more money on those sales. You've got liquidity, almost $40 billion of balance sheet, cash, and marketables. The company's got a lot of flexibility to do a lot of things. Shareholders are still supportive of pretty much anything Amazon does. They get to make investments that other retailers can't, which gives them a huge competitive advantage. So I think the folks in Seattle have to be pretty happy today.
Yeah. Well, Anthony, are you pleased with this quarter? You know, the one area that we've been focused on is the incredible growth in ad sales. That growth did slow. I mean, it's still up, 34%, but it was nothing like they saw last quarter.
I'm very pleased as well by these results. I mean, first off, sales are up 17%. That included a 200 basis point headwind from foreign exchange. As Charlie mentioned, operating margin was up 360 basis points. Earnings came in 51% ahead of the consensus estimate. So we're very pleased. Amazon is becoming a profit-making machine.
But why are they cutting Prime free shipping from 2 to 1? I mean, some would suggest maybe they need to grow Prime. Maybe growth there is slowing.
I think they have to compete with the brick and mortar guys who have all upped their games online and have the stores. And buy online, pick up in store.
And by the way, Target's down 5% today.
That's interesting to me. The buy online, pick up in store model is still incredibly effective for the brick and mortar guys. And for Amazon to keep pace without making a big expansion into brick and mortar, they're going to need to go faster. I live in Bucks County, PA, and there's an Amazon Flex location around the block from me, literally. And every morning I see 30 or 40 white cargo vans in the gas station filling up, and they're all full of Amazon packages, and that's the last mile capability Amazon's developing. And the Prime One Day is basically going to, A, keep up with the brick and mortar guys, and B, enhance Prime. And that's what Prime's all about, is giving the Prime member more and more benefits for their membership dollar.
How much room is there to grow Prime in the U.S.? What do they have now? I think Consumer Intelligence puts it at 100 million.
Not in the U.S.
How much?
Not in the U.S. We've estimated 60 to 65. When you look at households in the U.S., there's like 120 million households, billion households. And we kind of parse that into roughly 25% of them are under 30,000 in income. So you take those out of the equation. 65, maybe 70 million members is probably the best number that we look at.
Anthony, what about the stock price? You know, sort of a surprisingly, in the sense of Amazon usually gets a reaction one way or the other, but a neutral reaction to these numbers. What moves it higher if you think it's going to go higher from here?
Well, I think that as investors start to realize more and more that Amazon it's not just going to be about the top line growth, it's going to be about the profits. I think that will absolutely help. I mean, Amazon actually right now has a lower enterprise value to EBITDA multiple than some brick and mortar retailers I cover, which is remarkable. The second thing is the next white whale, right? The next big market opportunity for Amazon that could be healthcare, certainly could be groceries, with this new chain that they're going to be coming out with. So I think either way the stock works off of valuation, off of increasing free cash flow, or off of finding this next white whale.
AWS, Charlie, is always an amazing thing to see. $2.2 billion in profit, 42% top line growth after you X out FX. I mean, the thing just keeps growing. I would assume the expectations are that will continue. Yeah,
at some point, trees have to stop growing. They don't get to the sky, but this has been explosive growth on both the revenue and the margin expansion side, which for me is more important. It provides the retail business and the ancillary businesses with a lot of cushion. You know that AWS is going to generate X dollars in profits on a quarter-over-quarter basis, so the retail side of the equation has a lot of flexibility and still maintain a solid credit profile from where we sit.
Right. Got to remember, you're Moody's. You care about the credit side of the balance.
Yes. I'm trying to pick holes in all these arguments because all you analysts are very positive on Amazon. We saw similar results from Microsoft. The Azure business continues to climb on cloud. Is there any risk that as these two get in the cloud war, one of them could lower prices and then we could have a margin problem?
I mean, Amazon has been very vocal about lowering prices. They're in the 60s now over, and I can't remember what the time period is. But, yeah, there is that risk, because right now it's a lot of storage, which is, you know, our tech analyst, Steve Sohn, does a lot of work around this and helps me immensely. There's a lot of competition coming in that sector. And you've got Microsoft, you've got Oracle out there that wants to grow this business as well. So you'll see over time the same kind of competitive landscape in the cloud that Amazon is now facing with retail from brick and mortar.